All right, traders, I want to make this video for you real quick about how to eliminate stress or make your trading more stress-free, okay? And the best way to do that is to scale into your trades, okay? Now, let's just say you're going to go long at a $10 support level. Most new traders use market orders, and let's just say you never know if price is going to bounce right at 10. It might be 10.05. It might be 10.10, right? So let's just say you get in, you get your fill. Let's say you're going to use 500 shares, and you get in 500 shares at, let's say 10.10. All right, and then price goes down to $10, $9.95, $9.94, $9.92. A lot of times there's stops that are triggered and there's slippage, right? So, price oftentimes isn't exact to the penny, right? It'll slip a little above or below. So, if you bought 500 shares at 10.10 and now price is $9.95, that you're in the hole like 75 bucks, right? Almost $100. And a lot of new traders are going to be like, oh crap, they're going to cut their loss right there. Now, if you were doing the same 500 shares and you put a limit order in at 10.05, and then you put another limit order in at 9.95, and then you put another limit order in at 9.85, you are scaling into your position. If your 10.05 order is filled and price is $10, and you've only filled 150 shares, you're barely underwater, okay? And now price is falling, you get filled again, you're still barely underwater because you're averaging into your position. You're not adding to a loser, okay? The difference between adding to a loser and scaling in is you're expecting price to keep dropping a little bit so that you can get a better average, right? Scaling in is different. Adding to a loser is, price breaks way below and you start adding huge size so that a small bounce will get you out for break even, and oftentimes that doesn't end too well. It works sometimes, but oftentimes that's a recipe for disaster. So if you want to make your trading less stressful, just make sure that you're scaling into your position, okay? If price goes against you, you're not really too worried because you're barely underwater, right? And you always got to have a cutoff point, right? So, 20-cent marks are like magic numbers. So I would be scaling in all the way into 9.80, all right? If price breaks below 9.80, starts going 9.75, 9.7, then I'm out, okay? You got to do the same thing. But what's the difference? If I got 500 shares at 10.10, or 500 shares at 10.10, and and price is against you 30 cents, that 30 cents isn't really a big deal if you scaled in. But if you didn't scale in, 30 cents times 500 shares, you're underwater 150 bucks. Okay, now if you scaled into that position, that at that same price levels, you'd be underwater 40 bucks. Okay, and that's nothing. And then if price reverses right there, then you're golden. So you need to make sure that you're scaling into your position for a less stressful trade, right? And that's why a lot of traders close their positions in the first place, is they're so far underwater, it's too much stress. They're like, oh no, it's going to keep going against me, it's going against me, and they end up taking the loss. So professional traders don't fire one bullet, right? They scale into their trades. And I suggest you do the same. Now, if you're under the PDT rule, you got a small account and you're under the PDT rule, just remember this. If you buy 5 times, or 5 times, let's say 100 shares a pop. If you take 5 buys and 1 sell, that's still 1 trade, okay? So it might be a little harder to scale out of your position, but you can still scale into your position for a less stressful trade, and then scale out of your position, and then just fire 1 bullet to get out of your trade. You can do that and still not really affect your PDT status. It'll be 1 trade for the day, right? So a lot of mistakes in trading are made by oversizing or, you know, sizing up too quick. And I would just recommend that all of you scale into your trades. It'll make your trading a lot less stressful, all right? And, you know, you're anticipating price to move against you a little bit. And you want that. When you're scaling in, you want that. You know, your first order, or my first order, is the smallest order. If I'm going 500 shares, my first order is 100 shares. All right? As price keeps going against me, my next order is 100 shares. And then when price gets real close to where the slippage should be done around 980, then, you know, that's where my bigger order, my bigger buy is going to be there, right? And I suggest you guys do the same. If you do that, watch what happens. You're going to be trading in a more stress-free environment. When price moves against you, you're barely going to be underwater. You're not going to be stressing out. You're not going to be down $200-$300 right away. You know, you're going to be down 30, 40, 50 bucks. All right. But if you're wrong, remember, guys, if you're wrong, you need to have the discipline to cut the trade. Because at the end of the day, after you have your full position size of, let's say, 500 shares, if price starts moving further against you, you have to be disciplined to get out. Because as traders, we don't know where the market's going to go. We think it's going to bounce at a certain level or get rejected at a certain level, but we don't know. And we don't deal on hope. So if our max loss or max price for our stop is 975 and your last fill is at 980, if price goes below 975, you need to cut it. All right. And you got to be smart too. You got to look at the level 2 and see if there's buyers coming in absorbing at that level, because price could slip. But you know, you need to know, like, okay, this particular stock, the way it's trading today, a big order is 20,000 shares or 30,000 shares, right? Or 10,000 shares. So if you see somebody stepping up with 500 or 1,000, it's not enough to be convinced that price is going to move. But as it slips down, if you see, oh, boom, 10,000 shares, oh, 20,000 shares, then you have a higher probability of price reversing very soon, okay? And guys, remember, sometimes those orders get filled. Price doesn't necessarily bounce there. Sometimes price will come down to those big buyers. It'll fill those big buyers. You get that little slip and then it pops back up. So be very careful and just eliminate stress in your trading, right? The more stress-free your trading can be, the better trader you're going to be. And the best way I found to do that is don't oversize, scale into your position, and you're going to be much better for it. So I hope this helps you guys. If you have any questions, hit me up, istreamtrading@gmail.com, and we'll go from there. All right, peace.